Hello guys, my name is Nedu. I'm your Forex coach. In this signal video, I'll be analyzing the US oil. Yesterday was very massive for us at the ProfitPlus premium signal channel. We hit over 3,000 pips just in a single day. That's how we roll. All right, this is US oil to our chart here. I um, have a demand here and another demand. This demand almost got activated but couldn't reach. Nevertheless, market surged upwards. We know presently that the main fundamentals that is driving the US oil today is the geopolitics, US-Iran war that is presently escalating with no ceasefire deal in view. All right, this supports the bullish market direction. So price may continue to be bullish, and then with some sell-offs resulting to a dip, okay, and until the ceasefire deal is ceased, is agreed, okay. So this point, I'll always recommend everyone to, you know, to buy the dips. Any pullback, you can buy the pullbacks as we're seeing here, the lows. So whatever pullback that is going to be formed here, you can buy. All right. Okay, if I'm using Firstly, I want to use the Fibonacci retracement tool. We have to identify our lows. Here is our low, here is a high, significant low, high, significant low, and then significant high. We've not now established the level for the low. Nobody knows what the low is, but you can use some tools. So first I want to use Fibonacci retracement tool. From this low, I drag it to this high, the high. Okay, so anywhere from 50% downwards, that's this region, the region around here, from here, you see, anywhere from here into this place will give us a good point to enter. We're not going to buy from premium price, we're buying from discount. Okay, so any area from this 50% down to 88%, price touching this zone. So this is a very good discount area to buy this market from. All right. So this tells us that we don't buy, even though it goes up, no problem. Even though it continues to tick up from here, there's no issue. We don't lose anything. We'll have to wait for the market to move into this buying zone before we can expect price to surge upwards and take off this high. Now look at what has happened. I'm going to use the institutional marketing trading strategy right away. So I'm going to pull off our Fibonacci retracement zone, which has already given us an area around. So I'm going to box here now. This is around this place. So that's where we're expecting the price to hit for us to start looking for entries. Okay, here we had a very good supply zone that has been taken. You can see the supply. Okay, this is a supply zone. You can see the institutional sell-off here. And this was the last consolidation before that sell-off, so it forms a supply, right? Price hit that supply and pushed down, and then second test on it, it broke it. So the supply has been broken. So we're going to look for a flip demand, zone. That demand zone that took the supply is what we're going to look for, expecting price to come into that zone, and then we buy massively from there. And that is here. This is the last consolidation. You can see from here, you can see that here is the last consolidation before this bullish candle, the strong bullish candle that broke the structure. So price expected to come back into the zone. I actually missed the sales. We bought this yesterday. I actually trading the sales, but there's no issues. So I'm have to wait for price to move. This box is between 50% Fibonacci rate and about 88%, which actually gets to this low here. All right, so there's something here. Okay, so I'm going to check, we have a fair value gap here, an imbalance. Is this demand zone an imbalance demand zone? Fine, it's a flip zone. We want to check whether that flip zone is an imbalance flip zone. So here from this candle 1, 2, 3, okay, we're going to check it from here into this place. Yes, so this is the that area is the fair value gap. All right, you can see the fair value gap here that has to be filled. All right, price spreads come into this zone and then push into the tap into the demand zone, and then we can expect the market to move. So a lot of patience is expected here, expecting price to do all of these, tap into the zone, and then we can buy from there. So how are you going to trade? You use two methods. One is the confirm trade. You can use white curve, that shows the shift in market structure to trade this opportunity that is being presented to us right here. All right. Or you can do a set and forget trade. So we're going to buy from this side of the start end of the demand up to this high. Even though markets might move, we have this right. So just about few pips below the start end of this demand zone, and then the high will be our target. And this just about 1:2.7. So it's a good trading opportunity. So you can go ahead and place your pending order, and this is a buy limit because you are buying from a price level lower than the current market structure, which is here. We'll see how this will pan out. My expectation for price to move into the zone and then get back here. All right. Watch this video. If you like it, you can let us know to do more. You can join the Profit Plus Premium Signal channel just for a token amount, 60,000 naira monthly, and $500 if you want to be a live member of that particular channel. I'll see you in our next video.